The whales have been going nuts, and they have very much been perpetuating this run-up. Institutionals, BlackRock and MicroStrategy may be drawing headlines, but there's hundreds, if not thousands, of key stakeholders that have been contributing to this run-up and injecting more and more money.
Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Brian from Santiment. And folks, we are going to talk about the metrics around Bitcoin, Dogecoin, Cardano, Memecoins, and much more because the markets are ripping. Brian, good to see you. How are you feeling about these pumps?
Yeah, good to see you as well. I mean, it's obviously amazing to see that crypto is finally, as many put it, seeing its potential. It's been a long year of sudden pumps followed by months of chopping and letdowns. Even though we're up significantly, and we were even up significantly, before this pump to 90K, it felt as though we kind of had that sudden surge in March, and everyone who missed out on it has been disappointed all year. And then finally mid-October came around, and over the last 4-ish weeks or so, we've just been ripping like it's mid 2017 again. So very exciting to say the least.
Yeah, I mean, Bitcoin has not given me a lot of sleep over the past few days in a good way.
Yeah, at least it's the good sleep, or the lack of sleep. Yeah.
Yeah. So you know what? Let's start with Bitcoin. Let's take a look at some metrics, what you're seeing overall, and then we can go into altcoins and much more.
Totally. Yeah, I'll come back to that screener and give some context, but to kick things off, Bitcoin is, as always, kind of leading the charge, and its pumps have kind of come in 3 to 4 waves over the past week or two since we last spoke. And generally, after those waves, we see altcoins decouple. Obviously, Dogecoin, Cardano, or a few altcoins that have been superstars during that stretch, and we'll cover them during this call. But Bitcoin itself did touch 90K very briefly on Coinbase, right around there on other exchanges as well. Transaction volume has been up, but maybe not as significant as you would think. You can see the big jump here in late October, where it was getting about $29.5 billion in transaction volume on its highest day. And then November 5th, it got up to 34.6 billion. And refreshing just for the last few days, 33 and 31 billion respectively. So yeah, it's high, but we're not seeing crazy spikes, which is actually a good thing in my opinion. Usually when there's big transaction volume spikes, that can indicate a price reversal is coming. So you see the minor red candle that's showing up over the past 12 hours. It's not being supported with a huge transaction volume spike, indicating a reversal maybe right around the corner. Daily active addresses, kind of around the same thing. We did see quite a few unique addresses interacting on the network compared to usual. So that's generally a good thing. We want to see more and more unique addresses and unique tokens, which is what the circulation metric represents, just rising on every network. So it's kind of, especially on the active address side, looking pretty good. Circulation, not that much special. So, there probably is a little bit of increased wash trading going on, which is not going to show up in circulation, but it does show up in transaction volume. So that's interesting. But this is probably what I'm looking at the most right now, outside of whale activity, which we'll get to. 30-day average returns are at about plus 17.5%. Generally, anything above about 15-ish, this is, an arbitrary number, admittedly, but something we've kind of used as a rule of thumb at Santiment. Anything above that tends to be a bit of a danger zone. You can see it crossed above 15% yesterday. So this was roughly 24 hours ago when we were crossing 90, crossing 290, I should say. And it then retraced a little bit. But we're still seeing that we're in a bit of a danger zone right now. So I would like to see the average returns of any address active in the past 30 or 365 days drop down to this middle range here. which would indicate we can still kind of grow at a healthy pace. But remember, crypto is still a zero-sum game. So we want to see some people buying at the very, very top. Maybe there were some addresses, I'm sure there were, that bought right around, the 88K to 90K range, who are actually down just slightly already. Believe it or not, there are people who are down money despite this crazy run that we've been on, and that's needed in order for us to continue to pump. So I'll stop there for a minute, but yeah, what do you think on all of that so far?
Yeah, this absolutely makes sense. And it's some of the things I highlighted in my newsletter yesterday, as well as the podcast, that a cool down is needed because a continued move like this is not sustainable. And to your point of highlighting the metrics here, you need some sort of cool off, right? And it's healthy to build support levels.
Yeah, 100%. It's, there is always a cool off, and the people who have been around crypto for a long time obviously are waiting for it, because it's inevitable that we have some sort of drawdown. And this is probably the biggest evidence that we're going to see one, but it doesn't mean we're going to just drop back down to 70K. And I think sometimes people try to be too precise and too cute and clever with their profit taking based on the previous bull cycles we've seen in Bitcoin's history. What I would say is most likely would be a minor drawdown. I'm not going to give you a price prediction on, what time to sell now versus when to buy back in at X price. It's impossible for anyone to predict unless you're Satoshi and you're controlling the markets. But there's usually somewhere between a 3 to 5% pullback when things go up this rapidly at minimum. But the timing may not be now. That's the tricky part. You can go above 90K and maybe have one more tease at going all the way to 100 before we see that pullback.
Sure.
But again, when you're looking for a reference to what is a high versus what is a low at any given time, it's much easier to look at these MVRVs than to just look at the past 10 years of prices and be like, oh, that must be a high and that must be a low, right? You need to be looking at the context, which is why we have the MVRVs as a perfect reference.
Oh, absolutely. So what are the whales doing? Because, that's been a key reference point that we've been looking at for months, and it really tells a story, right? We can't really look at retail necessarily, but the whales, they control a lot of the market. What have they been up to?
Yeah, 100%. And that's kind of why I'm still pretty optimistic despite this crazy run we've been on. And we have seen, if I can get this axis correct, there we go. We didn't want it to cut off the screen. So they've been increasing their accumulation significantly. They were at about 16.19 million exactly 30 days ago in terms of the amount of BTC held by 10 plus BTC wallets. Now they're at 16.24 million. In 1 month, they've added 45,270 and a half Bitcoin to their wallets, which is one of the most torrid paces we've seen over a 1 month stretch in 5 years, if not longer. Wow. So the difference is between now and 5 years ago, it's a lot harder to buy 45,000 Bitcoin, right? Because the price is just so much higher than it used to be. So this is significant. And we were talking before the call, Tony, it seems as though there's a plan. A lot of the whales and key stakeholders may have a target price, and that target price has not hit yet because they're not going anywhere. They've just continued to increase their accumulation rate throughout this past week in particular, as prices have run off the page.
Wow. Yeah. And obviously the macro is aligning to that because obviously a pro-crypto president is coming to office. There's talks of a strategic Bitcoin reserve bill that could be passed. But then also you see on the macro that the stock market has been ripping as well, looking like it wants to hit new all-time highs. Before that, gold was ripping. So it seems like I have this thesis that we are in a macro bull market and all assets are seeing a rise, and it could be called the everything bubble, if you want to say that.
I can see it. Yeah, it feels like it's been more than a week since Trump was elected, but it's only been a week. I think with all the news, it feels like it's been 3 weeks now. But yeah, as soon as that news came out, we can't ignore the fact that that's when the pump started here. This is November 4th, and this was the day of November 5th. You can see the S&P went wild, and Bitcoin, actually, I should say, let's zoom in here so I can precisely show when the pump really started. Right about here, if you follow Polymarket, you probably saw that the odds kind of went from 60-40 in favor of Trump to all of a sudden it was like 90-10 and 95-5 as the polls were kind of showing that he was the front runner and then was very likely and then was official. So we had this huge pump here where we went from 70 to 75, and that was a big celebration. And then we had that minor pullback to scare the retail traders. And then the stock markets opened the next morning. So this was all my night here on the West Coast. And then the S&P reacted to the news of a perceived more business-friendly president being elected for the next 4 years. So everything went up. We kind of had some flatness over here over the weekend, and then crypto really started to pump. And it's just been everything, as you said, Tony, going up in tandem, except I guess gold is a good argument that it's not quite everything because
in the short term here, you're absolutely right? It's pulling back, and this has been kind of the MO for gold. Like it doesn't usually move alongside Bitcoin necessarily. Look, there are periods where it does, but more often than not, it's cooling down when Bitcoin's moving. But if you zoom out on that chart and you look at it from like a 2-year perspective, everything is rising. And it could be like some cycling of liquidity between these assets. But I mean, you look at that, and Trump or not, it's all, everything's rising. And my thesis is that this is all based on money debasement, currency debasement. And Trump, don't get me wrong, there's a level of euphoria and optimism that's added to the bullishness, but it's on the long-term time frame, it's all going up.
Yeah, this is an insane chart just to look at. You can see everything just blasted off. God, this feels like it was sooner than that, but this was only 13 months ago. Right around early October is when we just started seeing everything take liftoff. And whether you're in crypto, gold, or equities, or all of the above, it's been a hell of a 13-month stretch, as long as you've been holding steady and not panic selling too much.
So it looks like the stock market wants to hit new highs. Bitcoin seems to be following that, and with the optimism of Trump and so forth. So it looks like this is going to run into 2025. And look, there will be a top at some point, a correction, and maybe that's in 2025 or late, into 2026. But we'll have to wait and see.
Yeah, and just to play devil's advocate, taxes are a thing, and we're nearing the end of the year, coming from one of the best years for trading in general, no matter what sector you're in. This has been one of the best, and whales and retail traders alike, they do tend to take off some of their profits when it comes to huge years where there's a lot of capital gains to pay. So I would warn there might be something like that comes toward the end of December. We even saw that during the 2017 bull run. I remember the precise moment around like December 8th or 9th where we hit that like 80K something top. And then we had a pretty significant pullback. I'm not going to say that's definitely happening this time, especially if everyone expects it to happen. That really decreases the likelihood of something like that happening. But during big years where there's a lot of tax impact, there tends to be a little more volatility and weirdness when people get indecisive about what to do with their owed taxes.
And let's talk about supply and exchanges. Are you seeing that continue to decline? I know that's one of the indicators we were looking at, where the whales are moving coins back on the exchanges. That's a bad sign because they may be looking to exit the market.
Yeah, it's been actually looking pretty good, in my opinion. On Bitcoin side, you can see it's staying very low here in bright green. The percentage of supply, according to all the wallets that Santiment tracks, actually just went below 9%. It really hasn't been this low since 2018. So the risk of a future massive sell-off remains pretty low at the moment. There can still be a big sell-off for any reason, but
Sure.
theoretically, you want it to be low rather than high. And at the same time, look at all this dry powder, Tether and USD coin moving to exchanges, preparing for, more buys. So I like this combination of high stable coins on exchanges and low Bitcoin on exchanges.
Yeah, that's really telling. Very, very interesting. And one of the things I do, I follow whale alerts on Twitter, and I'm seeing the USDT and USDC minting. They track how much is minted at the treasuries, respectively. So it's fascinating that is all these things are in alignment, telling the story of where we're at and what the whales may be doing.
Yeah, 100%. I'm actually going to check the market cap really quick. So yeah, there was a big minting event on election night. Who knows how coincidental that is? But yeah, there was this huge run up right here in new stable coins since November 5th, 1 week ago from the time of this recording. There was an increase of about $3.6 billion in more Tether existing. So maybe they knew, who knows what, with all the conspiracy theories out there, but undoubtedly there has been a boost in the number one stable coin and how many existing coins are circulating now.
Let's talk about Dogecoin, because we're seeing some altcoins rip, man, and Doge has been on a tear. What are you seeing here?
Yeah, insane. So since roughly going back to November 2nd to now, the price is up another 41%. If we go back exactly 1 month, it's up 88% during that time. So, actually, I take it back. This actually needs a little refreshing. So now it'll look even better. So going back to the 13th till now, yeah, that makes more sense. Up 240%. We actually posted about it because it crossed 40 cents for the first time since 2021. Under 100K Doge wallets, which are obviously mainly retail, there have been an increase of about 75,000, give or take, addresses in the past 4 weeks, while the amount of 100K plus Doge wallets, which we can roughly call the whales and sharks, they've actually dropped by 350 wallets in the past 4 weeks. That's why we're a little bit iffy on how much further this run can last. Now, the last couple of days have actually looked pretty good. This pink line represents the whales and sharks. They have actually moved back up by about 105 wallets. But the amount of retail that's causing this pump tells me it could stop at any time. And it's really, of course, dependent on Bitcoin itself staying stable.
Yeah, I mean, as we were talking about, similar to Bitcoin, these type of moves, they're amazing, they're fun, but they're not sustainable. And the bull market works in phases. And if you have these extreme run-ups in continuing, that's not a good sign, because it means it could fall back really hard. Now, there's caveats to that, obviously, but you want to see sustained moves, pump, pull back, build support levels, another pump, right? Have it go in phases.
Exactly. It really is a pure gamble when it comes to any altcoin out there, especially if it's a meme coin. I'm actually going to show how, if I can get the axis right, show just how significant these run-ups have been. Because the average traders, we saw with Bitcoin, like it was a little above plus 15%, which is a bit of a danger zone. This 30-day one right here, it got all the way up to plus 74% less than a day ago. So that means the average wallet that was active in the past 30 days was profiting 74% on their moves. That's off the charts. Literally, it was off the charts. That's why I had to move the axis. So it's currently at about plus 41%, which is still crazy high when you talk about anything above this line being the danger zone, it's a pure gamble right now. And this doesn't necessarily mean we're inevitably about to fall, to a 50% crash or anything, but it means that buying right now, while the average wallets are already up so much, is a very big risk. And it could pay off, but odds are you have better times to jump in. And that's really all we can go off is probabilities.
Yeah, for sure. So let's look at the meme coin category in itself. I'm sure Doge is going to skew the numbers, but I also see Shiba Inu is moving as well. But overall for the category, what are you seeing?
Yeah, let's check this out here. So I'm just going to put on the 7-day performances, both on social volume as well as price. So you can see the social volumes just bright green everywhere. This indicates that this week compared to previous weeks, we're seeing an increase in discussions. So the crowd is very much aware of the Doge pump, and they're talking about it 234% more than they were the week before. No surprise there. They get way more excited about speculative driven coins when they're all pumping like, crazy paces that they have been. But besides Doge, you can see plenty that have actually been outpacing it. It's insane how much market caps are growing across the board. Pepe coin, which is not even Pepe. This is a different coin called Pepe coin, up 101%. Department of Government Efficiency, plus 3.
Yeah.
Yeah. Loose, plus 505%, but that's still not the best performer. This is the best one we see. Memes AI, up 713% in the past week. There's so many individual stories here from trading groups that are pumping these assets and getting people on board. It's kind of like the crypto version of GameStop and AMC right now. It's just the Wild West where they're urging people to have diamond hands and not sell. Some people do it anyways, and right now the social experiment for the people who are being patient is working out pretty well.
So fascinating, man. And it's incredible. But, one of the things I've seen is that there's a cycling liquidity. So to your point, there's a danger zone here for Doge, and that liquidity may leave Doge and go to other meme coins or other altcoins within the market. So folks have to definitely look at the data and be careful.
Exactly. And we saw the danger zone for Doge, which looks like this, up 111% in the past week. I can't even imagine what it looks like for some of these that are up 3 to 5 times more. So just be a little careful out there. And it's going to be very Bitcoin dependent. If Bitcoin really makes a run toward 100K over this next week, these kinds of gambles can actually pay off a little longer. But if it doesn't, and there's a little bit of choppiness and altcoins start to lose a little bit of steam, these are going to be the first ones to really collapse and break some hearts.
As far as other meme coins or the entire altcoin market cap, are you seeing any interesting data? Or altcoins,
yeah, if we go back to just the general screener here, Kronos has really gone nuclear, up 138% in the past week. We see Dogecoin there as the second best performer among these large and mid caps. Athena has actually been a great performer. Bonk, another meme coin. Floki, another meme coin. I've been seeing a lot of kind of A- tier large caps, the ones that are just outside, like the Ethereums and Solanas. So Chainlink had its own individual run earlier this week. Cardano up about 70% in the past week. So these are coins with a very large contingency of followers that get very hyped when their coins start to explode. And it's funny, when we post about them, we see like 5 times the amount of engagement compared to like a Polkadot Insight or something like that. So
for sure,
yes, there's a lot of individual large caps right now that are taking turns, and even XRP today has been going nuts, even though it's only up 33% in the past week. The past 12-ish hours for it at the time of this recording has been very good for it. So yes, it looks like there's a lot of altcoins taking turns right now, which is typical after profit redistribution starts for Bitcoin. It's really tough to say which ones are likely to be the best performers if this rally continues.
Yeah.
It seems as though meme coins are kind of where traders' focuses are right now, but they're also the highest risks because of how incredibly crazy they've been going with their market caps. So I would just say watch social volume. What I like to do is look at something like this. I'll go to weighted sentiment along with social volume, or actually, sorry, social dominance. So these two metrics show the overall bullish versus bearish perception from the crowd, along with the percentage of discussions related to that asset. And you can get a lot of quick insight just from looking at that. And it's actually looking pretty good for Bitcoin, by the way. This is not crazy euphoric, even though the news outlets are saying everyone is crazy euphoric. People have definitely been positive, but not like, crazy, like tell your grandparents that they get the Thanksgiving dinner and everyone needs to buy right now.
So Brian, I have a thesis, and I could absolutely be wrong.
Yeah.
I think the whales want to push this thing to 100K because that's a psychological number. It's going to make the mainstream, and then they want to do it before Thanksgiving because you know what's going to happen, right?
Yep.
Yeah.
Those family dinner talks.
Yeah. Did you see Bitcoin's 100,000? Right. That's a nice round number, and something people were pretty skeptical. The mainstream is skeptical that it can even get there. But once it gets there, I think they're all going to wake up.
I think that's a pretty decent, theory. I don't know if 100K is going to be their target or not, or whether 90 already was. It's really tricky to say. I've actually rarely seen like a round number end up being the top for these all-time highs. Like back in March, it was 73.8 or something. Back in 2021, it was like 68.3. I can't remember the exact numbers, but I would actually be shocked if 90,000 on the nose ends up being the new, all-time high for an extended period of time. So for that reason, you could be right that there's plans to push higher. But the theory for everyone watching is, when Tony says they want to push it to 100K, it's like they have a set number that they're trying to get to so that people then carry the baton and push it a little higher for them where they can sell at a premium and then basically watch prices start to collapse a little and buy back again.
Exactly. So that's my thesis. And maybe I could be absolutely wrong, but maybe, they push it to your point. Maybe it's 90K is a psychological number, or 95. And then Thanksgiving comes around, everybody talks about it. And then retail jumps in, the FOMO starts, and then it gets to 100, 105. Whales take profits. We see a nice correction, a healthy correction, not the end of the cycle. To your point, people get scared. They sell, whales buy, and then we go to 150 or something like that by middle of next year. I don't know.
Yeah. I mean, I think a lot of people would be plenty happy with that result. So, as always, it's the hodlers who are doing the best right now. Those who are not overreacting to these drops or these rises. And they're just kind of saying, all right, I'm going to let it sit in my cold wallet and, check on it when Sonny is going to college.
Last item here, if we could drill into some of the metrics around Cardano. I know a lot of folks want to know about that. It's been moving, and like you said, there's a big community behind it.
Totally. So one thing that's standing out is the transaction volume. We said there wasn't that much notable going on with Bitcoin, but Cardano is a different story. We actually are seeing a huge spike that happened on the 9th and 10th. And that tells me this actually could be a little bit toppy. Not to break hearts of anyone who's holding a lot of Cardano right now, but this generally shows there might have been a lot of profit taking by key stakeholders when we suddenly go to like nearly $8 billion in transaction volume when we hadn't seen that like all year long. And it correlates perfectly with like these big price tops. Yeah, I'm a little concerned by that and the timing of this red candle right after it. So that's not my favorite signal. Active addresses did look really good all of a sudden. But again, I think this, with how anomalous that spike looks, it looks a lot like profit taking, along with the circulation being a little high. But yeah, the active addresses and transaction volume being that high is concerning. Also, I won't change the axis. I can just highlight with my mouse, but you can see that average returns actually got up to about plus 57%, which again is way, way above the danger zone for average traders. It's a little more reasonable now at about plus 28, but I'd still be most comfortable if I were buying Cardano, doing it below plus 15%. And also, we didn't even look at funding rate for Bitcoin, but it looks very similar to Cardano right now. Big longs opening up. These are the largest spikes in longs versus shorts on Binance that we've seen since the March all-time high back then. So be concerned about the fact that people are starting to open up those leverage longs and margin accounts, trying to capitalize on a further Cardano pump. Definitely concerning. We'd much rather have them be shorting because that's typically where bottoms occur.
Interesting.
Even whale transactions here, you see the sudden spike. So that kind of confirms that transaction volume is correlated with some whale activity. It jumped up to $522 million plus transactions in one day after normally being in the 200s. So another concern there. Again, I don't know if this is necessarily the local top. It's going to be Bitcoin dependent, just like the Memecoins. Sure. But unlike some other coins, I do see some metrics that look to be very indicative of at least a local top right now.
Yeah, and personally, and this is not financial advice, like I would not be buying Cardano right here. I would be waiting for a good pullback after this strong run. I never buy into pumps. I always buy when it's red, and according to some of the data you're showing here, when you see like some things are bottoming out and the sentiment is starting to reduce a bit from greed to maybe neutral or fear.
Yeah, exactly right. And it seems like the FOMO, like Cardano was one of the most ignored coins all year long. It was not performing very well at all compared to most other altcoins out there. And then all of a sudden, we see this huge social dominance spike. The percentage of discussions related to all of crypto, it nearly got to 4% for Cardano, despite it normally being like 0.5, 0.7%. So yeah, the crowd suddenly jumped on and said, oh, look at Cardano go. Like this was the coin to buy all along. And then all of a sudden it hits the top right as the crowd is FOMOing into it. So it's a tale as old as time.
Absolutely. Brian, great stuff, man. It's so telling. The data is so beautiful. It tells you the clear story versus trying to use your gut or going with your emotions, because the markets can play with your emotions. And I hope these episodes, people are learning how to view the markets and to look at data first versus the emotions.
Agreed. Yeah. The more you can take emotion out of the equation, the better you tend to do. So we're always here to catch you guys up on the markets. And it's always a pleasure chatting with you, Tony.
Yeah, Brian, I think we may have to start doing these weekly as this bull market intensifies.
I'm down. Yeah, I know there's a lot of demand for what's happening right now. So yeah, let's catch up very soon and run this back.
Awesome. Thank you, Brian.
Thanks.